Well, and I'm going to throw a chart up real quick. This is a monthly chart of the 90s, and so as a reminder for folks that if you weren't around during that time, the 90s were spectacular. It was like, oh, this is where throw a dart, you make money, and it's just that easy. Of course, I started myself investing in 1997, and straight out of college, and didn't have much money, but I thought I was a genius, because and of course what I did was I extrapolated my returns and said, well, if I can just continue to do this for the next 10 years, I'm going to retire and I'm going to be filthy rich. Of course, that's not exactly how it worked out, just so you know. But the 90s, and I'm just going to go throw up Cisco too, because you mentioned Cisco, and of course that came out in 1990 with its IPO, and I believe it had like a 75,000% move from its first base. It was kind of a double bottom shakeout plus 3 base down here, 75,000% move. But here we are at top in 2000, and it still hasn't gotten back to those highs from 2000. And even though Cisco was still being widely used, there was certainly this level of speculation that happened during the 90s, as it was kind of like, oh, all of the things that could be possible. And I guess, is that where we're at with AI right now? Still in that, oh, all of the things that could be possible, but we haven't quite figured out. I mean, because again, like, in the 90s, we weren't thinking of phones necessarily. I mean, yes, I had my Nokia phone, strapped to my hip, but I wasn't thinking of apps. I wasn't thinking of all of those things that came along with it. So, is that what you're kind of getting at?
Yeah, exactly. I mean, it's betting on that growth rate to continue, and it's going to be very hard for that growth rate to continue unless there's this virtuous cycle, right? Like, if these companies that are buying from NVIDIA now are going to be buying this much from NVIDIA every year, I'll be shocked,
Mm-hmm.
right? It's got to take other businesses coming in and buying from NVIDIA, and it's got those businesses need to show returns. Right. What we're seeing right now is companies spending a bunch of money on NVIDIA gear, and investors are kind of like, okay, well, where's this investment getting us? And so they have to get to the point where they can show, here's what it gets you. And it will get you that consumer dollar, it will get you that business dollar, it will get you multiple dollars, right? And that's the question that still is there in this moment is, are we going to get to that place, or is it farther away than we expect?
Mm-hmm. Now, just to kind of follow along with the cycle here that we're laying out. Of course, after the dot-com burst, the bubble burst, we had a 79% correction in the Nasdaq. So, I mean, phenomenal on the way up, not so much for folks on the way down. But I will say, before Apple came out with the iPhone, you certainly had 2003, there was research in motion, right, with the BlackBerry. And okay, now we're doing email, via mobile. And 2007, that's when the iPhone came out, and I'm showing that on the chart here. But of course, we didn't really kind of get the we didn't get the oomph
Then
there
2008
because
happened, right?
yeah,
Like a few things happened in there.
yeah, we had a rough time in 2008. But again, we recovered there, and then you saw Apple come back in a strong way. And let's not forget, I mean, Apple was already doing well because of the iPod and how it was changing the music industry. So I'm just going to continue forward a little bit, because you mentioned Nvidia, and certainly Nvidia was getting a lot of attention, as you mentioned, in 2016, when it was kind of like, okay, the graphic processing unit, the GPU, what else can you do with this? I mean, it's great for video games, because that's what Nvidia was at first. It was, oh, these chips are great for the graphics for video games, but it really turned into this, what else can it do? And so, yeah, it seems like we've been talking about AI and a lot of these things that are possible for a while. So you mentioned a little bit of kind of a landscape change here. And I mean, you were talking in the pre-show a little bit about how layoffs are happening. Dividends are now happening in our big tech companies. Like, that's not something we had in the 90s. It was always about, oh, we got to put this money back into the company so we can grow.
Steve Jobs was so against dividends, right? And that became kind of this Silicon Valley mentality of no, we do not send our money back to Wall Street. We keep it here and we put it into the next generation of devices. We put it into research and development. That has always been kind of the thing. But then, yeah, once Facebook and Google laid off all of those workers last year and their profit margins just exploded, they didn't really have an excuse for not establishing a dividend anymore. They're basically saying we're going to be profitable now for good. And based on their businesses, yeah, they've made a lot of profit over the past few years. And like, even before they had those layoffs, they were not unprofitable, right? Their margins got squeezed a little bit, but they still were making massive profits. Now those profits are even bigger. But that, I have always taken, and this may be, and maybe you can tell me a little bit more from your perspective, Justin. Out here in the Valley, the thought is always, if you establish a dividend, it means you're done growing. It means you're done innovating. That has always been kind of the thing that you hear.
You have nothing better to do with your money than to give it back.
Right, exactly. And it's almost an admission in part that we have reached the end. And I think there is a level there. And I think Apple is the example here, that once Apple just started making so much profit, they couldn't not give a dividend, right? Steve Jobs died. Tim Cook took over. Tim Cook was the one who made the call to reestablish a dividend, but the fact is, like, the profit Apple was making, they couldn't get rid of it enough. They weren't making acquisitions like that. I understood. Meta and Google establishing a dividend is quite different. Mm-hmm. And it shows that they expect to continue running lean. This is not part of a cycle. And that was a big question I had when the layoffs happened last year. Is this just a cycle? Mm-hmm. And are they getting rid of all these people so they can invest in AI, move some of that money to hiring AI and buying NVIDIA gear and all of that kind of stuff? Or is this a permanent change where they're going to try to run leaner? That dividend, that tells me they're trying to run leaner. And I wonder, especially with something like Google, where the onus has always been like, let's develop the next new thing. Let's build Waymo within Alphabet, right? Let's do all of this. And now I don't know if they're going to be doing that. And it's a real question. But it is fascinating what is happening here. I mean, just to boil it down to the bare facts, big tech laid a bunch of people off, made a bunch of profit, and are dumping that profit into NVIDIA gear and dividends. Mm-hmm. And how does that pay off for the future is a huge question for me. Do they get our return on investment for the NVIDIA gear? Are they able to keep their headcount low and continue to make enough money to pay off Wall Street? Those are huge questions that they've answered for us in the past year, but we still have to see the proof as we move forward.
Yeah. And I want to, as you're talking about that, getting lean and stuff, of course, people think immediately of profit margins. And one of the things that you were saying is, okay, I mean, the S&P 500 had such a, look, 2022 was ugly. It was no fun to be investing in 2022. It was a bear market. And arguably, it really kind of started in 2021, but it was almost like this stealth bear for a little while. Growth was getting hit. You saw ARK K. We've talked about how ARK K being, a little bit more on the speculative side, really, started coming down in February 2021 through 2022. But a lot of this was being masked to a degree by the S&P 500, and especially in 2023, how strong it looked, and how that kind of profit margin thing, was changing. Can you talk a little bit about that?
Yeah, I think, if you put up a chart of the S&P 500 and the S&P 500 profit margin, you'll see they're correlated by about 3 to 6 months. When investors could see that the profit margin was about to rebound, the stocks went higher. Mm-hmm. And what we saw, 2021, the profit margin for the S&P 500 was far beyond anything we had ever seen. And there was a lot of calls of greedflation at that time, where the inflation was crazy and the profit margins were expanding. And everybody went, oh, these companies are increasing prices and it's all going to their bottom line, which was the case. Hmm. But in a lot of cases, that was before the costs came in, right? These companies knew that they were going to increase salaries, knew that they were going to spend a little bit. They went ahead and increased prices before those costs got there. So in 22, when we saw the market really hit a wall, was when we got those costs coming in, and all of a sudden margins shrank, right? Second half of 22, we were not looking good into 23. What happened at the end of 2022 and the beginning of 2023? Big tech laid off workers.
Mhm.
And so when we saw the entire S&P 500 profit margin rebound last year, that was almost entirely big tech. And NVIDIA was a big part of that. NVIDIA really became a part of big tech last year, and their insane profit margins
Mhm.
were a huge pillow there for the S&P 500. So that is really where we are now, right? We had these greedflation margins that were out of whack with anything we have seen in all of history in 21. It looked like those were going away, which, okay, yeah, that was probably not where we should have been to begin with. But then big tech came in, laid off a bunch of workers, and rescued those profit margins. And now we have a place where Wall Street just now expects these higher profit margins. In fact, they expect them to grow even more and to
Right.
expand. And where AI fits into that, that's how AI works. And I wonder a lot about whether AI is going to drive new revenue or it's just going to drive profit margin to where you
Mhm.
can use this software to take over jobs that people are doing right now for cheaper, and you expand your profit margin, but your revenue probably isn't going to grow that much at that point. And how does the market react to that? That's a question I might have for you, Justin. What is the difference between a market with revenue and profit growth and a margin and a market with negligible revenue growth and profit growth? What's the difference there, right?
Mhm. Well, I mean, sometimes we kind of lean on the chart, in a lot of these cases, and because there are definitely times where you kind of see, oh, you know what, profit margins, or pick your indicator, pick your fundamental gauge. The market just doesn't care as much. Oh, you know what, we care more about this right now. In 2018, it wasn't as much about the earnings growth; it was about the revenue growth.
Revenue growth.
Yeah, that was if you were showing revenue growth, that was good enough.